Institutional Equities at Motilal Oswal Financial Services, who joins us from the sidelines of the Motilal Oswal Ideation Conference. Rajat, thanks a lot for joining us. Pleasure having you on the show. Tell us a little bit about how the market is looking to you right now. At a time when rates are going up, inflation is the overarching concern. Do you think the market rally that we saw last year has hit the pause button? And if yes, what is the investor approach now? Rajat, your voice is on mute. Can you just unmute yourself?
Hi, good morning.
Go ahead.
Yeah, so I think the two important things driving the markets right now. First is this entire global volatility, which is causing, on a daily basis, $300 to $400 million of FII outflows. I think we are somewhere more positive because the domestic inflows have been very strong enough to offset that. And the second, many of the sectors are facing, I would say, very rapid changes in their earnings outlook, right from commodities to cement to paints. Not just the commodity producers, but even the commodity users in many spaces have seen big changes in their estimates over the last 3 to 6 months. At this point of time, like the global markets, the Indian markets are also stuck in a range. And I think we will have to weather this time to see through the macro, the inflation time, before any definitive direction in the market comes back.
Rajat, but near term, what's your view though? Good morning, Prashant here. Do you have a firm view in terms of, when I say near term, I'm not talking about a few days, but maybe a month, 2 months out. Will we be significantly lower, or will we be maybe higher from these levels?
So Prashant, if you look at the markets, we are going through both price and time correction. Almost for a year now, Nifty may be holding at the same level, but many of the sectors, many of the stocks are well below what they were a year back. In some cases, they are almost touching the pre-COVID levels also. So I think the aggregate Nifty is not right now showing the right picture because the broader parts of the markets are right now seeing a lot more damage. I think we just need to tread through this next 3 months of this aggressive rate hikes by the central banks across the world. I would think that we have gone through a reasonable part of the time and the price correction. From here on, market should see more stability, and with positive triggers emerging maybe after a quarter, you can start seeing things moving up again.
Mm-hmm. We're speaking to you from the sidelines of your ideation conference. Tell us a little bit about this. What all would you be covering, and what is the mood like now amongst the participants?
Yeah, so this is our 8th ideation conference. This is a conference where we essentially focus on companies with market caps of $300 million to $3 billion. Every conference has between 65 to 80 companies, and these are across sectors. This time the diversity across sectors is even more. We have lenders, we have non-lenders, we have infra, consumption, global IT, discretionary. I would think that companies are right now still watching the situation, because whoever has been the commodity user, their margins of Q4 and Q1 are taking a significant hit. But on the other hand, I think people are still positive. They are continuing to invest back into the businesses. From the investors' profile, Sonia, if you look at the Indian market, in the last 1 year, we have seen a large ownership shift happening towards the domestic investors. And this just doesn't cover the mutual fund, but there are many newer segments of domestic money which is now flowing into the equities from a long-term point of view. So from the client side, we are seeing a very exciting lineup of domestic investors, be it the mutual funds, insurance, family offices, and many other investors who have been putting a long-term money in this market.
Just curious to understand when COVID happened, because I guess of circumstances and people at home and time in their hands, many decided to, and of course, markets were booming from the lows. Many decided to take their investments into their own hands, and do it yourself became a big thing. With things becoming a bit trickier now, has that started to reverse in a big way, Rajat?
Well, I think you probably will have both the streams running in parallel, Prashant, right? If you look at the monthly mutual fund flows, that SIP flows remains intact. The discretionary money may be volatile month over month. You have one of the media that spelled about the government raising the a contribution of equities into the pension money. So I think the institutional flows from the domestic pool into the equity markets will only get bigger and bigger with passing time. As far as the direct money is concerned, I think it's a function of the market sentiment also. And that keeps changing. You know, in times like this, you may see some moderation, but as you get back into a growth mode, those investors can come back. So I think finally, as a country, we have found that a big pool of domestic money flowing into the equities, whether it comes directly through investors or in form of large institutions, that needs to be seen.
For now, it doesn't seem like that's flowing through anywhere, right? I mean, I know the domestic money is coming in thick and fast, but with the way the market is moving, one keeps questioning that. Rajat, you know, I was going through your recent note on the Q4 earnings and the big takeaways from there. I do notice that in your hits, in the sectors that have done well, oil and gas features on that list. And of course, as we know, you know, the Singapore GRMs hit a record high of $25.2 a barrel, and that bodes very well for Indian refiners who have perhaps stepped up their purchases of discounted Russian oil as well. Do you think oil and gas will continue to do well even in the first half of FY23? And how are companies like Reliance placed? I mean, is the best already priced into these stocks?
So, you know, the two parts to this. First is the oil and gas. You know how cyclical this space is, right? The Singapore GRM last 20 years have moved from almost 0 to now 25. I think 25 is something that at least I haven't seen over this long period of time. I would say that the sustainable Singapore GRMs will be well below this. But till the time cyclicals have their party, the stocks also participate. So right now, you know, we have seen not just the commodity producers, but even these refiners earning or having the best of their time. From a Reliance point of view, you know, the overall contribution of this traditional oil and gas business has come down a lot in the total valuation of the company. And that's why if you see Reliance does get a big boost from the refining margins, but from an overall value point of view, there are so many other pieces that all of them continue to do well. As a stock, it will do well. But I think the excitement that you will see in the pure refiners, like, you know, your MRPLs or Chennai Petroleum, etc., Reliance will be a far more balanced bet compared to them.
Rajat, you know, after the correction we've seen, there are always opportunities which open up, right? Where there has been excessive pessimism which has been built in, which perhaps is unwarranted, and now there is valuation comfort. Can you identify some top ideas from your end that you are pushing to investors from your side?
Yeah. So Prashant, in the same strategy note also we articulated that three themes which look good to us. I think one consensus theme across all your guests is banking, and we will see how that pans out after the credit policy today. But I think earnings wise, credit growth wise, they are only trending higher. Second, if you look at autos, maybe after a 4 or 5 year of underperformance, you are seeing things becoming far more better for them on the business front. I would think that the worst of the earnings for the auto is behind. And the third, as a theme that as a house we are very positive, is this entire domestic travel and tourism. I think that we are going to see a lot more wallet share increasing in favor of these companies, be it hotels, holiday planners, QSRs, multiplexes. This entire piece is going to look very exciting for the next 1 to 2 year point of view. So, you know, picking the best managed companies in each of these spaces is what a good portfolio construct should outperform in the times to come.
Okay, in private banks, even in your earnings wrap, you've mentioned that there's asset quality improvement, there's moderation in slippages, so that's a big plus for you. But we also, you know, are seeing that a similar trend pan out in PSUs, right? I mean, the management of SBI was with us yesterday, and they said not only is loan growth picking up, but they don't see any asset quality pressures as well in the quarters to come. Do you think it's a better bet to look at large PSU banks like SBI rather than private? I mean, just at this point because of valuations?
Well, valuation has always been a differentiator for last 20 years between an SBI and the other private banks. But if a banking cycle were to do well, I think SBI will surely tend to outperform. And the important point that you mentioned, Sonia, that last 5 years, the total stock of provisioning that all these banks have carried, the next 5 years, the next 3 to 5 years, hopefully should be a lot lower. And if the credit cycle starts moving up to 13-15%, I think there's a lot of re-rating that can happen, not just in the PSUs, but also in the private bank.
Okay, re-rating in PSUs as well as in private banks. Just one last word on autos, because you do mention that in Q2, of course, there was strong passenger vehicle sales, but two-wheeler sales have been weak. You mentioned it briefly a while back as well. This morning, you have some big brokerage upgrades coming in from the likes of M&M, from the likes of CLSA on names like M&M. Do you think the passenger vehicle space will take off in a big way now, purely because consumption is back, supply pressures have eased, raw material pressures have eased as well?
Yeah, so I think the four-wheeler pack should hopefully do better than the two-wheeler, and within that, we are already seeing good demand for commercial vehicles, tractors, and hopefully passenger vehicles post this good monsoons in the upcoming festive season should also start doing good sales. So that's why I mentioned about autos, and within autos, a four-wheeler over a two-wheeler should do better from here.
All right, Rajat, we'll leave it there. Thank you very much for your time. It's a pleasure having you with us here on CNBC-TV18, and have a good conference.